After several days of intense negotiations, the Trump administration has shown signs of softening its tough stance on launching a global trade war. At the same time, the crypto asset market has also started to recover. The main reason for the slowdown in the trade war is that it has already triggered a dollar crisis. A clear indication of this is the simultaneous decline in the US dollar, treasury bonds, and stock indices, which has sparked panic in the Wall Street financial sector. So, what is the underlying mechanism between the dollar crisis and the prices of crypto assets like Bitcoin? Broadly speaking, a dollar crisis primarily reflects a loss of confidence in the US dollar. This includes factors such as a soaring US fiscal deficit, increased risk of debt default, depreciation of the dollar, and its declining purchasing power, and aggressive monetary easing policies by the Federal Reserve. Prolonged low interest rates result in excess money supply. There's also a global trend of de-dollarization, with countries reducing their dollar reserves or using alternative currencies for international settlements. The relationship between the dollar crisis and Bitcoin prices unfolds through the following mechanisms. First, rising demand for safe haven assets drives up Bitcoin prices. Due to its decentralized nature and limited total supply, Bitcoin is viewed by some investors as a safe haven asset. When a dollar crisis occurs, investor confidence in dollar-denominated assets declines, prompting them to seek alternative assets to hedge against risk. As a novel digital asset not subject to the monetary policies of any single nation, Bitcoin can theoretically attract significant inflows of risk-averse capital during a dollar crisis, thereby pushing its price higher. For example, during the global economic crisis triggered by the COVID-19 pandemic in 2020, the US dollar came under significant pressure, and Bitcoin's price surged from around $7,000 at the start of the year to nearly $30,000 by year-end. Second, changes in market liquidity also influence Bitcoin prices. To counteract a dollar crisis, the US government and the Federal Reserve may implement various monetary and fiscal policies to stabilize the economy and the dollar's exchange rate. These policies can lead to shifts in market liquidity. For example, if the Fed adopts a quantitative easing policy and injects large amounts of liquidity into the market, although most of this capital may flow into traditional financial markets, some could indirectly enter the Bitcoin market, driving its price upward. Conversely, if tightening policies are adopted and liquidity dries up, Bitcoin prices may come under pressure. Third, investor sentiment and market expectations also affect Bitcoin prices. A dollar crisis often triggers market panic and concerns over the broader economic outlook. Investors may lose confidence in traditional financial markets and start to view Bitcoin as a promising alternative investment. Furthermore, Bitcoin's growing acceptance and recognition enhance this effect. In times of dollar instability, such optimistic market sentiment could be amplified, attracting more investors into the Bitcoin market and driving prices higher. However, if investors become excessively worried about the duration and severity of the dollar crisis, their overall risk appetite may fall significantly, leading them to favor cash or safer assets over Bitcoin. In such scenarios, Bitcoin prices may also face downward pressure. Against the backdrop of a dollar crisis, Bitcoin's identity as digital gold is further reinforced, and it is increasingly seen as a potential alternative for a globally accepted digital currency. If investors generally believe that Bitcoin will play a significant role in the future monetary system, then as instability in the dollar worsens, Bitcoin's value as a benchmark asset becomes more evident. Its price may rise in line with investor expectations of its long-term value. In conclusion, the relationship between a dollar crisis and Bitcoin prices is one of the core topics in understanding Bitcoin as a decentralized safe haven asset. Closely monitoring the dynamics between the two can help us make more objective and systematic judgments about broader market trends.